Coming up on Business Incorporated today, Moody's places First Bank of Nigeria Limited's rating on review for downgrade following central bank's actions. And Fitch affirms Morocco's credit rating at BB+ with a stable outlook. Africa Finance Corporation issues a $750 million 7-year Eurobond for infrastructure projects. Hello and welcome to the program. I'm Ini John Mekwa. We begin today's show with the market numbers, which were mostly negative on the African continent. The NGX index shaved off 0.85%, while the JSE in South Africa declined 0.23%. Only the index in Egypt was positive by 0.71%. Kenya ended Wednesday's session negative. And sentiments in the Middle East were not so different. However, markets were mixed. In the UAE, the Abu Dhabi index gained the most by 0.59%, while Dubai's index rose 0.52%. Elsewhere in the region, the Qatari index made a marginal loss of 0.01%, while the market in Saudi Arabia declined 0.48% at intraday. We move now to Europe, where markets were more modestly higher today as investors monitor a slew of corporate earnings and with the latest monetary policy decision from the Bank of England. Well, Chelsea has more to tell us from the European scene. Hello, Chelsea. Good afternoon.
Good afternoon.
So the U.S. has backed a proposal to temporarily suspend intellectual property rights for COVID-19 vaccines in an effort to boost production. Europe says it could also get on board with that. What could this mean for pharmaceutical companies?
Well, this has been called really a monumental proposal from the U.S., but pharmaceutical companies across the world are very upset about this proposal. Intellectual property rights are very important for pharmaceutical companies, for biotech companies. Many of these companies that are making vaccines now, like BioNTech here in Germany or Moderna in the U.S., have spent years really developing the technology that underlies these vaccines, so they don't want to be forced to give it away to other drug makers around the world. So we have seen some of these stocks really take a hit on the market. Moderna was down more than 6% yesterday in trading. So a lot of pharmaceutical companies are coming out today and making a range of arguments about why this is not the best way to increase vaccine production. One of those arguments is that it will really discourage a lot of pharmaceutical companies from investing in research in the future. If they're not sure that they can protect their patents, they may not really want to continue investing in these products. Another argument is that this really would give some of the US's and also Europe's rivals access to this technology. If you think of Russia and China, there's a concern that this would really allow some of their competitors to piggyback on their technologies. But I'd say the bigger argument is that this is possibly not the best way to do this. Making vaccines is extremely complicated. It requires not just the recipe to a vaccine, it also requires a lot of skilled personnel. It requires a lot of different materials, a lot of expertise. And so even if a manufacturer in a smaller developing country has the recipe, they may not be able to really scale up production in an efficient way. So there's still a long way to go on this proposal. It has to be approved at the WTO level. There are more than 160 countries in the WTO, so there's still certainly a lot of discussion that's going to be had over this proposal.
Yeah, well, we'll wait those discussions and their outcome. Well, Volkswagen has had one of the best quarters in its history despite the pandemic, and the global shortage of semiconductors seems not to be affecting them. How has this automaker managed this?
Well, the odds were really stacked against Volkswagen in this quarter, but they did manage to pull off pretty impressive results. They saw profits, revenues all really surging in the first quarter, and a large part of that is due to China. Of course, in the last quarter, in the comparable quarter, in the first quarter of 2020, China was in the midst of a very, very hard lockdown, so sales were quite low there. But even so, Volkswagen reported that sales from China were up about 60%. As well, they're starting to see quite a significant increase in electric vehicle sales, particularly here in Europe. The sales of purely electric vehicles rose by about 78% in this quarter. So that business where they've been investing a lot of money is starting to take off. But they did give a lot of warnings today that the next couple of months could be quite rocky for Volkswagen. The semiconductor shortage has been impacting them to some degree, but the CEO of Volkswagen said that they expect a much bigger hit to their bottom line in the second quarter from the semiconductor shortage that we're seeing. So they are off to a strong start this year, but certainly plenty of barriers ahead.
Yeah, and there's new data for Eurozone construction, PMI, and Germany's manufacturing sector. Please tell us more about this.
Sure. So I'll start with Eurozone construction data. We actually saw pretty much a stagnation in Eurozone construction activity in April. It did expand ever so slightly, but really it was about flat in that month. It was really mixed across the different sectors. We saw, for example, home building pick up, so construction of residential homes and apartment buildings was higher. We did see construction of commercial buildings fall in a lot of countries, as well as civil construction, so infrastructure projects funded by the government was also down in a lot of countries in April as well. So the construction sector is really muddling along here. A different story for manufacturing here in Germany. It was a quite strong growth in March, actually about twice as high as economists had been projecting. And I'd say one of the biggest takeaways from this report is that German manufacturing is not only being driven by exports now, so we'd seen this for several months where exports were really strong in part because of China. That was really boosting the manufacturing sector here, but they're actually starting to see a lot more demand domestically. So here in Germany and across Europe, that's a good sign that shows that the manufacturing strength is really starting to broaden beyond China and other export destinations.
All right, Chelsea, thank you so much for that information and enjoy the rest of your day. Well, we'll now move to London for insight into the monetary policy decisions. And Juliana is here. Hello, Juliana. Good afternoon.
Good afternoon, Inni.
So the Bank of England's decision is out now. Were the rates raised as economists expected?
Rates remain at 0.1%, which is still historically pretty low for this country. But the growth rate for 2021 has been lifted to 7.25%. This is a massive jump from the 5% that was projected in February when the Monetary Policy Committee last met. A lot of this, of course, is down to the successful rollout of the vaccination programme. Also, as well, some of the data that we've been discussing on this programme over the past couple of weeks has really kind of backed up the Bank of England governor's claims. We've had really strong PMI data showing that services, manufacturing and construction are all showing optimism that we haven't seen in some quarters for over a decade. Unemployment currently standing at 4.9%. If you think about it, this time last year we were talking about numbers that could potentially have hit about 11 and 12%. So this is all great news. Next week we are going to be getting GDP figures for the month of March, which will give us a really good look at the first quarter. Now, of course, at the beginning of the first quarter, we were still in the midst of a pretty serious lockdown. So even though we expect Q1 GDP to fall between about 1 and 1.4%, again, if we go back to February, the Bank of England were projecting that the fall could be between 4 and 5%. So it's all pretty good. Also as well, on the 12th of April, non-essential retail and the hospitality, well, outdoor hospitality was open. So Q2 is looking pretty strong, which is why we've seen these big numbers. Another headline a lot of people were talking about was quantitative easing. Last year, the Bank of England added an extra £150 billion to inject some life into the economy. This doesn't come in all at once. It comes in every single week. So at the moment, they've been printing about £4 billion every week. That is going to reduce to about £3 billion. Within the minutes, Andrew Bailey did state that this isn't to show that their stance on monetary policy is changing, but it is going to taper off slowly until it comes to an end in October. So this is great news, and it's reflected in the numbers at intraday. The FTSE All-Share is up 0.20%, the FTSE 100 is up 0.12%, and the FTSE 250 is up by 0.56%. In the currencies market, the British pound also up against the US dollar by 0.04%, down on the euro by 0.30%, and up against the Japanese yen by 0.04% at intraday, Annie.
Yeah, but not very good news there. The fishermen are still protesting over post-Brexit fishing rights, and there's still the question of who really owns UK fishing rights.
Well, it depends on who you ask, because seeing as you're talking to me in London, of course I'm going to say the British, but no, it's a pretty significant story. Before I get into the context, worth pointing out that even the Pentagon have been commenting on this, asking the British and the fish to stay calm, and they hope the British and the French and the fish to stay calm, and hoping that it doesn't escalate out of control. Also important to note for our viewers that last night, Boris Johnson sent 2 Royal Navy ships to Jersey, which is the biggest island in the Channel Islands, just 14 miles away from France. If you look at this on a map, you would think this island belongs to France. It doesn't. It's a crown dependency that's at the centre of this pretty tense diplomatic row at the moment. And just before I came into the studio, Sky News were reporting that French authorities are sending a military operation vessel called the Athos to carry out a patrol mission. Now, for some detail, when Britain left the single market due to the whole Brexit divorce, they also left this fisheries treaty that they've belonged to since the 1970s, which basically gives all EU countries an equal share of Europe's abundant fishing waters. That's scrapped, but to allow some sort of continuity and to allow fishermen to get used to the new processes, Britain has allowed French fishermen to continue fishing within their waters as long as it's only 12 miles away from Britain, up until 2026. One of the main sticking points is that you would have had to have been fishing prior to this new Brexit rule, which was signed, sealed and delivered on Christmas Eve last year. Now, what's caused this massive row is that Jersey have pointed out that there are 12 French vessels fishing in their waters that have been unable to prove that they were fishing before this deal. That's the detail which I think is really important, because some people obviously have no idea what's going on. So this has caused a standoff at the port of Jersey. Lots of very angry fishermen. In fact, it's a shame we can't show you the pictures, but there have been some quite serious clashes between British and French vessels. And so the British Army has been sent out there, the British Navy have been sent out there, and also as well French ministers have threatened to cancel the electricity that they send underground to Jersey. So there is lots of detail, lots of nuance, but unfortunately the main key word that comes out of this again is Brexit. Can't do a business crossover without mentioning that, Annie.
Yeah, you can say that again. Well, TUI is planning to help families save hundreds of pounds through COVID-19 tests. How will this work?
Yeah, this is a great story for British holiday makers, especially those who like a budget holiday. TUI, the largest tour operator in Britain, is now going to be offering cheap, very cheap PCR tests. They can typically cost you between £120 and £200 per person. They're now going to be offering them at £20, and that's because tomorrow hopefully we'll be hearing from Grant Sharps, the Transport Minister. He will be spelling out which countries are going to be on which traffic light system when international travel is reopened again on the 17th of May. If you are going to a green destination, and we're expecting lots of European countries to be on that destination, you don't have to quarantine on your way back home, but you do need to show a negative PCR test. If you're travelling to Spain or France or somewhere on the continent, typically you can pay about £20, £30 for a ticket. The fact that you had to pay an extra £100 on this test has put a lot of holiday makers off. And two, we are hoping that this new deal that they're doing with Chronomics is going to assist with families, family of five, you know, £1,000 being reduced to about £100 is going to be absolutely wonderful. So I'm sure many other airlines are going to follow suit.
And I'm sure, Juliana, you're going to take a little bit of it, I guess. Anyway, thank you so much for the updates, Juliana, and try to enjoy the rest of your day. Well, we'll take a break now. When we come back to domestic commodities market updates. You're welcome back. You're still watching Business Incorporated. And just before we go to the commodities market update, Moody's Investors Service has placed all long-term ratings and assessment of First Bank of Nigeria Limited on review for downgrade. According to Moody's, the review will focus primarily on an assessment of evolving governance considerations at First Bank, specifically corporate governance development. The rating action follows the dissolution of First Bank's board by the Central Bank of Nigeria on April the 29th. As a result of this action by the CBN, all the non-executive directors were removed while the executive management remained in place. Moody's explains that the review for possible downgrade reflects the view that the removal of all non-executive directors of the bank's board by the regulator demonstrates corporate governance shortcomings and weaknesses in board oversight. The ratings agency adds that the bank needs to implement regulatory directives concerning the resolutions of loans to and shareholding in non-banking related parties, which reportedly had not been executed in the recent past. And Fitch Ratings has affirmed Morocco's long-term foreign currency issuer default rating at BB+, with a stable outlook. According to the ratings agency, Morocco's BB+ rating is supported by a record of macroeconomic stability reflected in relatively low inflation and GDP volatility pre-pandemic, a moderate share of foreign currency debt in total general government debt, and relatively comfortable external liquidity buffers. The agency sees large fiscal deficits driving a further rise in government debt despite the economic rebound. However, Fitch estimates that plans to improve delivery of social services and expand social benefits with modest recovery in tax revenue, lower grants, and continued spending pressures from the pandemic will keep the government deficit at 7.1% of GDP in 2021 and 5.8% in 2022. We'll now go to our domestic commodities market now, and we're speaking kerosene. Kerosene, which is also generated from crude, is a common household oil in Nigeria used for lamps, cooking stoves, and more. Well, we'll focus on this with Juliet Adenuga. She's the head of treasury at Financial Derivatives Company, and she's joining us to discuss this with us. Hello, Juliet. Good afternoon, and thank you for joining us the second time this week.
Thank you for having me. Good afternoon.
Good afternoon. So the price of kerosene has increased by 8.37% in 2021 to 361 naira in spite of the massive campaign to switch from the use of kerosene to liquefied petroleum gas for cooking. Why is the price still going up?
The demand for kerosene should pull the price in either direction. When the demand is not strong enough, it's just going to have a negative effect. Presently, the price of kerosene continues being on the upward because demand is high. In spite of the fact that the World Health Organization's air quality guideline has ruled kerosene as a polluting fuel and has advised against its use, still most families or most households use it either as a primary source of cooking fuel or as a secondary source of cooking fuel. You still hear some people telling you that they prefer to cook their beans with kerosene, even when they have their gas cookers. So the fact is that there are so many reasons people do. Some people prefer to use kerosene, and some people cannot afford to switch easily, because for you to be able to switch to liquefied petroleum gas, you should be able to afford a gas cylinder, which is expensive. You should be able to also have a cooker, even if it's a tabletop. And for low-income earners, that isn't easy to come by. So many factors also affect, some people it's just their habits. Some people it's the age and education. You see that in the rural area, and older people, they prefer the kerosene. They're sure. If you even want to introduce it, like if you want to buy your mom gas cooker, sometimes she will tell you, just leave it with the kerosene. So it's just some factors that some people also think that it's more dangerous to use gas, because explosions, from gas accidents at home have, proven to be more fatal than kerosene explosions. So because the demand is still there for kerosene, it is not going to, the price won't just crash. It is a deregulated market. The market forces determine the price. So that's what is causing this continuous trend in the price of kerosene.
So that means to reduce this demand because of health reasons, a whole lot more of enlightenment needs to be done. But anyway, kerosene, like diesel, has been deregulated. But we see that the kerosene, which is used also as aviation fuel, of which the demand is depressed due to lockdown and reduced air travel, it didn't witness a corresponding drop in the price. And why is the price not crashing?
Yes, during the lockdown, there was a reduction. No travel. It was a total lockdown for some places like Nigeria. Nobody went anywhere. So definitely the demand for aviation fuel, which is the same as kerosene, dropped. We also have to remember that during the lockdown, people stayed at home. People did more cooking. People ate more. In short, after the lockdown, one of the first challenges people had to deal with is how to lose the weight they added, during the lockdown. So I think that there was a kind of, it balanced out. What was lost in terms of demand for aviation fuel was gained also from increased demand by households for kerosene for cooking. It might not be a perfect, balancing out, but at least it's close to it. Since people didn't travel, they stayed home, they had time to cook, to, do a lot of things with kerosene, especially in the kitchen area. So that couldn't allow the price to crash. And immediately after the lockdown, there wasn't a kerosene glut. It's not as if kerosene was everywhere, to pull down the price. Being a deregulated market, like I said earlier, the market forces will determine what happens to the price. And as long as there's no scarcity, as long as it's still there for people to buy and they can afford it and there's demand for it, the price will still keep going up. It won't just come crashing down.
Okay. All right. Well, Dangote Refinery is expected to be commissioned in 2022 with a projected 650,000 barrels per day output of kerosene. What do you think will happen to supply and demand as well as price then?
Okay, with the entrance of the Dangote Refinery and an increase in output to the tune of 650,000 barrels per day on kerosene, that's major, supposed to shift, the supply of kerosene. And, being a deregulated market, it's supposed to attract other players too, because, the Dangote coming in will be like an incentive for others. And once there are many players, there's competition. With supply increasing, price will definitely drop. That's what will happen to the price of kerosene. But we also have to consider the fact that there's a time lag for all this, the aspects of commissioning, the aspects of increasing in production before it gets down to the consumers. There is a time lag. And I think this time lag might be enough for people to begin to, buy into the campaign to shift from kerosene to a cleaner energy. In short, presently, people are using biofuel. There's a kind of fuel that is green in color. It's like it's used in a kerosene stove. It's cheaper, it's a cleaner energy. It's a cleaner fuel for cooking. So people are beginning to get, the awareness is there and people are picking it, just that the response is not as expected. But with the Dangote Refinery coming into play, the time it will take and everything, I think the awareness will grow. I think people will shift more to cleaner energy and the demand for kerosene will drop in the midterm.
All right. Thank you so much, Juliet, for sharing your thoughts with us on kerosene this afternoon. Enjoy the rest of your day. Well, that was Juliet Adeniga, the head of Treasury at Financial Derivatives Company, and she brings us to a close on Business and Corporate. So this afternoon, thank you so much for watching. I'm Ini John Mekwa.